put your phone or device aside and immerse yourself in this audio story. Perfect for listening on the move, while relaxing, or for bedtime listening. We release new stories daily, so make sure to like and subscribe to not miss out. This story is based on true events. When $83 billion in gold vanished into thin air. In the summer of 2020, deep inside a warehouse in the Chinese port city of Wuhai, auditors broke open a sealed vault that was supposed to contain 83 tons of pure gold, collateral worth $4.2 billion. What they found instead was copper-painted gold, fake bars stamped with official seals, stacked floor to ceiling in a criminal deception so massive it would eventually expose over $83 billion in fraudulent loans across China's entire financial system. This wasn't just one warehouse. This was the tip of an iceberg that would reveal the most elaborate gold fraud in human history. A dark business story where metal, money, and truth itself became nothing more than illusions. The question that haunted every investigator was simple, terrifying. If this gold was fake, how much more was out there? And more chilling still, who knew? To understand how phantom gold nearly collapsed China's financial system, you have to understand the shadow world where this corporate scandal was born. A world where gold isn't just metal, but the very foundation of trust in modern finance. China's gold financing system operates in the darkness between legitimate banking and underground money. Companies desperate for cash don't just walk into banks and ask for loans. In China's labyrinthine financial mystery, they offer gold as collateral. Physical bars stored in warehouses, supposedly safe, supposedly real. Banks lend against this gold, trusting that if the borrower defaults, they can seize and sell the metal to recover their money. It's an ancient system, rebuilt for modern capitalism, worth hundreds of billions of dollars annually. But there's a vulnerability at the heart of this business thriller, one that criminals had been quietly exploiting for years. Gold moved through a complex chain: mining companies, refineries, trading houses, warehouses, inspectors, and finally banks. At each link in this chain, someone touches the metal, verifies it, certifies it, moves it. At each link, there's an opportunity for deception. The fraud began not with master criminals, but with opportunity meeting desperation. Small trading companies in China's commodity markets faced a brutal reality in the late 2010s. Economic growth was slowing. Profit margins were collapsing. Banks were tightening credit. But these companies had discovered something. If you could convince a bank you owned gold, you could borrow against it. And if you could borrow against the same gold from multiple banks, banks that never actually checked if the gold existed or who else had claims on it, you could multiply your borrowing power exponentially. This real-life business story of phantom gold began with a simple, terrible innovation: the fraudulent warehouse receipt. Companies would deposit gold in warehouses, receive official certificates of ownership, then use those certificates to secure loans from banks. But the system had no central registry, no way for banks to verify if the same gold had been pledged multiple times to different lenders. It was a financial mystery waiting to explode, and criminals quickly realized they could pledge the same bars of gold to 5, 10, 15 different banks simultaneously. Each bank believed it held exclusive rights to the collateral. None knew they were sharing. Then the fraud evolved into something darker. Why stop at pledging real gold multiple times? Why not pledge gold that didn't exist at all? Warehouse operators, trading companies, and corrupt inspectors formed secret alliances, backroom deals sealed with bribes and the promise of wealth beyond imagination. They began creating false inventory records, fake inspection certificates, forged purity tests. On paper, the gold was perfect. 99.99% pure, properly stored, fully insured. In reality, the vaults were empty or filled with cheaper metals painted gold, or contained real gold that had already been pledged to a dozen other lenders. The scale grew with each successful deception. What started as millions became billions. Small trading companies borrowed against phantom gold to stay afloat. Then they borrowed more to pay back the first loans. Then more still, spiraling deeper into a business crime that would eventually dwarf any previous fraud in the commodity markets. By 2019, an estimated $83 billion in loans were backed by fraudulent gold collateral across China's financial system. Banks from Beijing to Shanghai had extended massive credit lines, believing they were protected by physical metal, sitting safely in inspected, certified warehouses. They had no idea they were lending against nothing but air and painted copper. The wealth and power built on this deception was staggering. Trading companies used the fraudulent loans to expand their operations, buy real estate, invest in stock market secrets, and project an image of financial strength. Warehouse operators collected storage fees on gold that didn't exist. Inspectors pocketed bribes to certify fake bars. Everyone in the chain was getting rich, and everyone had a reason to keep the secret buried. But like all corporate scandals built on lies, the phantom gold scheme contained the seeds of its own destruction. The moment would come when someone would actually need to see the gold, touch it, verify it was real. And when that moment arrived, the entire illusion would shatter. The first crack appeared in Wuhai, a dusty industrial city in Inner Mongolia, in June 2020. Dongguan Trust Company, a major financial institution, had extended a loan of $4.2 billion to Wuhan King Gold Jewelry, a company that claimed to own 83 tons of pure gold stored in warehouses across China. When Kingold began missing payments, Dongguan Trust did what any lender would do. They sent auditors to inspect the collateral. What those auditors discovered would trigger the unraveling of the largest gold fraud in history. A business scandal documentary worth of revelation that would expose the rot at the heart of China's shadow financial system. The warehouse in Wuhai was climate-controlled, secure, professionally managed. The inventory records were impeccable. The inspection certificates bore official government seals. Everything looked legitimate until the auditors began conducting purity tests on the gold bars themselves. The first bar they tested failed, then the second, then the third. Bar after bar, the tests revealed the same horrifying truth. The gold was fake. Beneath a thin gilded surface, the bars were copper, a metal worth less than 1% of gold's value. But this discovery was only the beginning of a financial mystery that would grow exponentially darker. As investigators dug deeper into Kingold's operations, they discovered the company had pledged the same gold, both real and fake, to over 30 different lenders. Each bank believed it held exclusive rights to specific bars of gold, identified by serial numbers. In reality, those same serial numbers appeared on loan documents at institution after institution. The question every bank in China suddenly faced was terrifying. How much of our gold is fake? Chinese regulators, realizing they were staring at a potential systemic crisis, ordered immediate audits of gold-backed loans across the country's entire financial system. What they found was a business crime of unprecedented scale, a web of fraud so vast and so intricately constructed that it had operated undetected for years, possibly decades. Warehouse after warehouse revealed the same pattern. Vaults that were supposed to contain hundreds of tons of gold held nothing but copper bars with a golden sheen, or contained real gold that had been pledged to multiple lenders, or were simply empty. The inventory records completely fabricated. Inspection certificates had been forged. Purity tests had been falsified. Warehouse operators had conspired with borrowers to create phantom inventory that existed only on paper. By the end of 2020, investigators had identified over $83 billion in fraudulent gold-backed loans, a figure so staggering it represented nearly 15% of all commodity-backed financing in China. The implications were catastrophic. Banks suddenly realized they had massive exposure to loans with no real collateral. If borrowers defaulted, and they were defaulting rapidly as the fraud was exposed, the banks would have no assets to seize, no gold to sell to recover their losses. The fraud had created a phantom asset base worth tens of billions of dollars, money and greed, transforming into a systemic threat to China's financial stability. But beneath the financial mechanics of this dark business story lay a more disturbing truth about entrepreneurship secrets gone toxic, about how moral collapse happens not in one dramatic moment, but through thousands of small compromises, each one seeming reasonable at the time. The executives at companies like Kingold hadn't started as criminals. They'd started as entrepreneurs in a brutally competitive market, facing legitimate cash flow problems, looking for ways to stay afloat. The first fraud was probably small, pledging the same gold twice, just temporarily, just until cash flow improved. But once that line was crossed, the next step became easier. Then easier still. Before long, they were manufacturing fake gold bars, bribing inspectors, creating entirely fictional inventory. Each person in the chain rationalized their role. The warehouse operators told themselves they were just providing storage services. What the companies did with the receipts wasn't their responsibility. The inspectors convinced themselves that a few approved certificates for gold they hadn't thoroughly tested wouldn't really matter. The company executives believed they would eventually make enough profit to buy real gold and replace the fake bars before anyone noticed. But lies in business compound like interest. Each fake bar required another fake bar to cover it. Each fraudulent loan required more fraudulent loans to service the debt. The scheme grew exponentially, feeding on itself, until it became too massive to ever unwind without detection. The question that haunted investigators was how this business thriller had gone undetected for so long. The answer revealed uncomfortable truths about China's financial system and about human nature itself. Chinese banking regulators had known something was wrong for years before the scandal exploded. Internal audits had raised red flags about gold-backed lending as early as 2017. Regional banks had reported suspicious patterns, the same gold serial numbers appearing in multiple loan applications, warehouses that seemed to hold impossible amounts of inventory, inspection certificates with subtle inconsistencies. But each time investigators began looking closer, they encountered resistance. Local government officials, whose jurisdictions depended on the tax revenue and employment from these trading companies, pressured regulators to back off. Bank executives, facing pressure to meet lending quotas and grow their loan portfolios, didn't want to discover that billions in assets on their books were worthless. Warehouse companies and industry associations lobbied against stricter inspection requirements, arguing they would harm legitimate business. Everyone had an incentive to look the other way, to assume someone else was verifying the gold, to trust that the system was working. This collective delusion, this willful blindness, is how fraud of this magnitude survives. It's not that no one knows. It's that those who suspect choose not to confirm their suspicions because confirmation would force them to act, and action would destroy the comfortable fiction everyone is living inside. The Phantom Gold scandal was, at its core, a story about the danger of unchecked ambition and the price of success when success is built on lies. It was a story about how financial systems can become corrupted when there's no independent verification, no central oversight, no mechanism to force truth into the light. By late 2021, Chinese authorities had arrested over 200 people connected to the fraud: company executives, warehouse operators, inspectors, and corrupt bank officials who had accepted bribes to approve loans they knew were questionable. Courts handed down sentences ranging from 10 years to life imprisonment. Several of the most culpable defendants received death sentences, later commuted to life imprisonment without parole. The companies at the center of the scandal, Kingold, Wuhan Financier, and dozens of smaller trading houses, were liquidated. Their assets were seized and sold, but there weren't enough real assets to cover even a fraction of the outstanding loans. Banks wrote off tens of billions in losses. Several regional financial institutions that had been heavily exposed to gold-backed lending required government bailouts to survive. But the true cost of the phantom gold scandal wasn't measured in dollars or yuan. It was measured in something more fundamental: trust. In the aftermath, China's government implemented sweeping reforms to the commodity financing system, a rise and fall story that forced structural change. New regulations required all gold used as loan collateral to be stored in centrally monitored warehouses with real-time inventory tracking. A national registry was created to prevent the same gold from being pledged to multiple lenders. Independent inspectors, government-certified and randomly assigned, began conducting surprise audits of warehouse inventory. Banks were required to physically verify gold collateral before extending loans, not just accept warehouse certificates at face value. The reforms were comprehensive, but they came too late for the thousands of businesses and individual investors who had lost everything when the fraud collapsed. Small companies that had taken legitimate loans suddenly found their credit lines frozen as banks panicked about gold collateral across the board. Investors who had bought products backed by gold-secured loans watched their investments evaporate. The ripple effect spread through China's economy for years. But perhaps the most chilling aspect of this billionaire secrets and corporate scandal was how close it came to complete invisibility. If Kingold had made just a few more loan payments, if the auditors had arrived a few months later, if the economic conditions hadn't forced that one default at that one moment, the fraud could have continued growing, spreading, metastasizing through China's financial system until the eventual collapse would have been catastrophic beyond imagination. The phantom gold scandal revealed a fundamental truth about modern finance. The entire system rests on trust. We trust that banks verify collateral before lending. We trust that inspectors actually inspect. We trust that warehouse certificates represent real metal in real vaults. We trust that the paper trail from mining to refinement to storage to lending represents physical reality, not just documentary fiction. But trust, once broken, is nearly impossible to rebuild. Even after all the reforms, even after the arrests and the new regulations, a shadow of doubt lingers over China's commodity financing markets. Banks are more cautious, borrowing costs are higher, and the question remains unanswered. How much other phantom collateral exists in the system? How many other warehouses hold copper-painted gold? How many other frauds are still operating, waiting for their moment of exposure? The executives who orchestrated the phantom gold fraud told themselves they were doing what was necessary to survive in a competitive market, to keep their companies alive, to protect jobs. They convinced themselves the fraud was temporary, that they would eventually make enough profit to buy real gold and replace the fake bars before anyone discovered the truth. They believed they could control the deception, manage it, contain it. But fraud, like fire, has its own logic. It doesn't stay contained. It grows, feeding on itself, until it either consumes everything or gets extinguished by discovery. The phantom gold scandal was the latter, discovered just before it reached the point of systemic catastrophe. Today, some of the fake gold bars from the scandal are kept in the Beijing Museum of Financial Crime, displayed behind glass as a warning, a physical reminder that in business, as in life, there are no shortcuts to legitimate success, no ways to build lasting value on foundations of lies. The bars look perfect, gleaming, properly stamped, officially sealed, Only when you look closer, when you test beneath the surface, do you discover the copper underneath. They are, in their own way, a perfect metaphor for the companies that created them, shining on the surface, worthless at the core, and ultimately, inevitably, exposed. The phantom gold scandal stands as one of the most elaborate financial mysteries ever uncovered. $83 billion in fraudulent loans, backed by metal that never existed, or existed only as copper wearing a mask of gold. It was a business scandal documentary in real time, exposing how greed transforms into systemic risk, how individual compromises compound into catastrophic fraud, how the machinery of modern finance can be hijacked by those willing to exploit trust for profit. But beyond the numbers, beyond the arrests and the reforms, the phantom gold scandal leaves us with a darker question. In a world where wealth increasingly exists as digital entries in databases, where collateral can be pledged and repledged without anyone physically verifying its existence, where the paper trail matters more than physical reality, how many other phantoms are hiding in the vaults of our financial system? The Chinese government says the problem has been solved, that the reforms have closed the loopholes that allowed phantom gold to flourish. But in the shadows of China's commodity markets, whispers persist of new schemes, new ways to multiply collateral, new methods to create assets from nothing. Because the incentives that created the phantom gold scandal, the pressure to lend, the pressure to borrow, the pressure to show growth and profitability at any cost, those incentives haven't disappeared. They've just gone underground, waiting for the next opportunity, the next vulnerability, the next moment when someone decides that painting copper gold is worth the risk. And somewhere in a warehouse in China, investigators believe there are still vaults that haven't been opened, gold that hasn't been tested, phantom bars that continue to exist on paper, backing loans, creating wealth from nothing. The question isn't whether the gold is real. The question is, when will we finally check? Subscribe and listen to our next story below.